Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw. I'm a senior market specialist at FXCM. It's the 19th, Friday, the 19th of January, and welcome to everyone. And what I want to do is go through our disclaimers, and I'm going to start off with the high risk investment warning. I'll keep this on screen for a few moments as we start off the webinar or the live stream. I'm begging your pardon. All right, let's bring up our market commentaries disclaimer. Again, I'll keep this on screen for a few moments. Okay, excellent. And what we will do is we shall start off with the real rate as we usually do. So let me go ahead and share that tab. All right, you should be seeing the real rate now. And what we are looking at, so this is the daily, and let's take out all the drawings. And let's move from the daily. Let's actually go down to, say, a 4 hour. Let's see what we can glean off of that. Yeah, okay, that's better. All right, what I want to show you is if we go all the way back to the 12th of January, we even go sort of to the beginning of Jan, say, here's the second, you can see we've kind of got this movement up here in the real rate. So you've got that movement up in the real rate. And that's what's driving the markets at the moment. We've seen effectively a sell-off in markets. And the reason we're seeing a sell-off in the markets is because yields are tending higher at the moment in terms of the first few weeks of 2024. And we've addressed this throughout the week, but it's worth repeating because this is the key that we need to keep on top of, is that at the end of last year, the markets were effectively pricing in quite aggressively rate cuts for 2024. Now, the key is, are those rate cuts, the pace of those rate cuts, going to be maintained? And that's a key question. At the moment, the probability of a rate cut in March is around about 54%. Okay, we're around about 54% there. Now, let's say that's 50-50, gives us a 50-50. It's down from about a week ago when we were at about 77%. So there's the repricing right there. If we get pushed back to May, so if we skip March and we go to May in terms of the rate cuts, it's probably not a big deal. I think the market, there'll be some sort of repricing. Where it's going to get exceptionally tricky is when, if the May rate cut gets pushed back, because then we're going to have real headwinds on our hands, and then we'll see a potential risk off repricing. So the idea here is to just keep a view of whether we're going to get a rate cut in March. We got 50-50 now. Remember, the data that's come out in January has actually been pretty hot. We've seen hot jobs data. We've seen sticky inflation data, so to speak. The headline number actually increased, and then retail sales were really impressive to the upside. So the idea is that the economy is running hot, and if it's running hot, well, you probably don't want to lower rates. You want to control the heat, and the way the central banks control the heat of the economy is by maintaining the um, rates. So we kind of get a higher for longer type of narrative, and that's what's been communicated over the last a week or so from policymakers, officials, right? So that's why we're kind of getting this this push up, and you can actually see it's quite steep. If we go back to last Friday, okay, we get this really steep increase in the real rate, and that's really acting as the headwind on our instruments. All right. The question then, of course, is how do we play this? I think that the market actually is quite difficult. Hey, Kim, good morning to you and welcome. I think the market at the moment is quite difficult. I think we've started the year off because it almost is that we are forced to consider counter trend opportunities. That's not first prize. We want to trade with the trend, and what I would suggest is if we go through to the daily chart of the real rate, the bias is actually to the downside. Bias, I think, is to the downside. We can put in a neckline here. Here's the head and shoulders. We actually can also put in a neckline this way. Oh, give me a moment. There we go. Could also take it so if we delete that, here's the left shoulder. So any which way we look at it, by and large, it seems to me that the bias, okay, subject to correction, is to the downside. So ideally, that's the direction of the market that we want to be trying to exploit. The problem is that depending how short-term a trader you are, well, the action is taking place on the right shoulder because we're getting pushback on that March rate cut, and it's 50-50 now. So the fact that it's 50-50 now, I think makes it quite difficult for us because it's a coin toss. It's a coin toss. So what we could do is let's skip weekly charts this morning. Let's just take a look at daily charts. In other words, we are zoning more into the sort of near term, and hopefully that can give us some sort of clue in positioning. So right off the bat, let's go through to US dollar. We'll take a look at the US dollar. We'll go look at the US dollar daily chart, see where it's positioned in terms of our zones, and see if we can position off of that. So let me share that chart with you. Here's the US dollar daily. And I want to just reiterate, I think that we're in a tough environment because this is all counter trend. It's not a comfortable place to be in, okay, if it's all counter trend. So the idea here is, well, we're in zone one. What's zone one? Zone one is between the upper blue and the upper red bands. We've got overhead resistance above us, but we're not there yet. We've got this movement in the bands that suggests the short-term counter trend has legs. That remains to be seen. We'll see if that's the case. But at the idea, you can see the bands are expanding. So you've got the upper red band pushing up, you've got the lower band pushing down and starting to curl around. And you've got the RSI above 50. Above 50 is on the bullish side of the RSI. As long as we stay on the bullish side of the RSI, dollar supported. And if dollar supported, that's going to have repercussions for the majors, for the other majors, right? So Let's go down to the hourly chart for the US dollar and see if there's any timing decisions that we can make. Okay, so we're going to go down to the hourly chart now on the US dollar and just see what kind of signals are being generated there. I want to just zoom in here. Okay, I just want to zoom in here. Yeah, that's better. All right. And what we're looking for, assuming that the counter trend is in force, assuming that the counter trend is in motion, okay, then you're going to have to see the EMAs show angle and separation to the upside. So I'm not sure we're going to get that or not, but that's the counter trend. So as long as there's pushback on that March interest rate, and it's kind of 50-50 now, all right, one would expect the repricing to continue, albeit I'm not sure albeit probably at a slow pace. But we'll need to see some sort of angle and separation to the upside on the US dollar. If we get that angle and separation on to the upside, then we're getting safe haven capital flows. If we're getting safe haven capital flows, then we are seeing a pressure on the risk market, such as stocks. We'll see money flowing to the safe haven of the dollar. You can already see that the stochastics pointing up, but the idea here is we need to see angle and separation on the US dollar, and that would line up with the daily chart. Now, if the daily chart falls from zone 1 to zone 2, then I think the counter trend's over. Then I think we're starting to move back towards trend. So it's very, very interesting just to keep an eye on that. So if the dollar is showing some sort of strength, what's happening, say, euro? Let's take a look, euro. Okay, so what we'll do is we'll just change the ticker here from US dollar to euro US dollar. We'll use the FXCM instrument. Okay, we're sitting in zone 3. Well, that makes sense. If the dollar's sitting in zone 1, then we'd want to see the euro sitting in zone 3. What's zone 3? That's the lower blue, lower red. Take a look at the channel's pointing down, so it does seem to be indicating some sort of weakness. And then you've got the RSI here. You have the RSI here below 50. So if it's below 50, there's bearish momentum on that euro US dollar, right? Well, if there's bearish momentum on the euro US dollar, and we're in zone 3, the lower channel, we want to see if we get some sort of timing signals to the downside with euro US dollar, understanding that this is all counter trend, making it an uncomfortable place for us to be as traders. Okay. Hello, Anna. How are you? You've said lost again. Just expand on that comment, Anna. Just need to understand where I lost you. Okay. So if we've got the euro US dollar pointing to the downside, okay, we've got the euro US dollar pointing to the downside on the daily, and now we take a look at it on the hourly. Okay, you can see what we need is a bearish cross. We need a bearish cross here of the EMAs. I'm just trying to, there we go, that's better. We need a bearish cross of the EMAs there. So we'll need the 5-hour green exponential moving average to cross below the orange 10-hour exponential moving average. And what we'll need to see is we'll need to see the stochastic move down. So we get the stochastic moving down. Okay, we get the bearish cross. Then we're starting to get. Then we had to get. Hi Anna, can you see me now? Is everything going okay? Everything okay your side? But the idea here is the bearish crossover. Okay, and the movement down. That would line us up. That would line us up with the daily charts. So understanding, hey Raj, good morning to you. Nice to have you on the live stream. Okay, that would be the synchronization. And we understand that's all counter trends, all counter trend. It's very uncomfortable. Let's take a look at pound US dollar. This is an interesting one because pound did show some sort of reaction to stronger than anticipated inflation data coming out of the UK. Let's take a look at it. Let's go to it and let's just check the pound US dollar. Okay, so here, this is no good. This is no good. Okay, what I mean it's no good. It's sitting in no man's land. It's sitting between. It's sitting between the neutral area. Sitting between the blue. So that's neutral. We don't want to trade. We want to be either in zone 1 or zone 2. We want some sort of directional bias. But the fact is that we're sitting in no man's land. We can skip it. So in other words, the dollar showing strength, pound showing strength. Well, why would you want to trade a forex pair where each one of them is showing strength? You want to match relative strength with relative weakness, right? Let's take a look and just see what's happening with gold and seeing if gold is the antithesis of the US dollar. So what we'll do is, again, understanding that we potentially counter trend here, go through to the ticker, go through to XAU USD. Okay, we'll use the FXCM instrument here, and we're in the lower lower zone, zone 3. So we're between the lower blue, the lower red. We are also showing some sort of bearish bias on the RSI is below 50. Okay, this is an interesting one because we are tending to move sideways. We're tending to move. Let me try that once more. We are tending to move sideways. Okay. Nevertheless, even though we're tending to move sideways, we'll just follow our model, and we're in zone 3. So we want to see if we get some sort of signals on the hourly. So let's go down to the hourly chart, specifically looking at gold. Okay, and it's interesting here. If we take a look at gold, it's actually not giving us anything. We would need to see movement to the downside. Would need to see movement to the downside. So the very fact that gold is moving up is already suggesting to us that perhaps that counter trend may be coming to an end. Okay, so again, I want to reiterate, it's not a comfortable place for us to be in. I'm finding the markets quite complex. Why is it complex? This is the key point. This is the key point in that it's moving from a perception that we were getting a rate cut in March to now nothing better than a 50-50 coin toss. All right. Let's take a look at one more chart. We'll take a look at DAX and then we'll conclude. Let's take a look at DAX. Okay, it's an interesting one. We've got a very tight Bollinger Bands. It seems as if something is going to happen, but the bias does seem to be to the downside. We're in zone 3. The fact is we've jumped into zone 2 today. That's between the two blues. We're in neutral, and if you take a look at the RSI, it's popped above 50. Let's just go down to the hourly, see if the hourly is giving us anything on the DAX, and if it's giving us anything on the DAX, then potentially we'll see a movement towards that zone 3. Let's just take a look at it. I don't see us getting much here. Okay, we've just gone past the cash open. It's looking very, very strong. Again, this may be suggesting to me that counter trend coming to an end. Hopefully, the charts make more sense, easier to read next week. We've had a very, very difficult week, because okay, we've had counter trend. And what I mean by counter trend is when we go back to the 4-hour real rate, it's been pushing up. And the fact that it's been pushing up this week has made it very, very uncomfortable for traders. Okay. Anna's saying, wouldn't it be better just to wait until things clear? That's I think the smartest, probably the smartest strategy, Anna. It's so just to reiterate what's happening. Okay, or let's conclude. The long-term trend shows a head and shoulders on the real rate. We're waiting for that neckline to break. That should break if interest rates come down further. There is an expectations for interest rates to drop, but there's been pushback on that over the last week, especially being reflected in the real rate where we've seen it moving upwards, introducing counter trend type of opportunities. We don't want to trade counter trend. We want to trade with the trend. And Anna's just suggesting maybe it's better that we wait until things clear up. And I think that's a pretty smart strategy. Let us conclude at this point. Are there any questions? If there's any other questions, please go ahead and type those in. I'll just wait a few seconds to see if there's any other questions. All right. Nothing coming through. Let's wrap up here, guys. Have a fantastic weekend. We shall chat on Monday morning. Speak to you then. Cheers, guys.